Well, let's get another take on this. We're joined right now from Bailey Island, Maine, by Steve Leuthold. He's the founder and CEO of Leuthold Research, a big-name investor, a legendary investor who's been investing for decades. Steve, I've got to ask you, when I saw the market rout over the last several weeks, I was thinking to myself, what does Steve think about what is going on? What do you think is going on here?
Well, I think, Bob Farrell, a friend of mine who I think is one of the best market analysts there's ever been, called it the perfect storm. And I think that's what it was. You had three factors come together. An economy that was disappointing with those GDP numbers and that revision backward. And then you had Congress, I guess the clowns in Congress came up with nothing of substance in terms of regaining any confidence on the part of the public. And then finally we had the trouble in Europe, very serious trouble. So that all kind of came together, and confidence went out the window, both with institutions and individuals. And when there's no confidence, there's no buyers.
Well, so Steve, and if there's no confidence, does that mean there's no floor here in the markets?
Oh, I think there eventually is a floor. I mean, we tend to look at it on a valuation basis, and when you see the market get down to, say, the bottom quartile of historical valuations, at that point, we generally will get aggressive and say, it's got to get better from here. But that's a long way down from here. I mean, that works out. If we had a 30% decline, which from the peaks, which would be kind of a normal bear market, that puts us down around 1,000 or 950 on the S&P. So that's a long way away. We'll get a good rally before then, I'm sure. In fact, maybe this is the beginning of it. I don't know.
Steve, it's Erik Schatzker here. I want to ask you, are you feeling as though that's where we are headed? 1,950 on the S&P 500 is something we're going to have to confront in, what, the next 6 to 9 months?
Well, Erik, I think that's probably the bottom. I mean, that's the point where I would be willing to come in and be aggressive buying stocks on a value basis. I'm not saying we're going to go there, but we did go there in 2008, 2009. So we could get down to that bottom quartile of valuations again, but it doesn't happen every time. But I do think we're in a bear market, and I think I'm not so sure that it's an economic bear market. We actually maybe have a couple more quarters of expansion here, but there are a lot of bear markets that are non-economic, that are other factors. My first one was 1962, and then of course we had 1987 and things where other factors came together to produce a big decline in the market.
So Steve, given your views then, are you lightening up on your equity holdings or not?
Well, we're in our asset allocation funds, we're 45% equity exposure. So we wish we were 35, but the market came down too fast and we didn't have a chance to do that. So maybe if we get a decent rally up here, we'll go down to 35.
Now, I know, Steve, we talked a lot about your holdings. You own a little bit of Citigroup, you own JP Morgan. Banks got pummeled yesterday. Are you regretting at all having gone into the financials? You think you jumped in too early?
Yes. I regret it.
So are you selling them out or what?
No, I mean, we looked at these, in fact, 4 weeks ago and decided that probably when we looked at our numbers and our comparisons and our models that we use on a quantitative basis, they still looked all right. Maybe the numbers are not accurate. Maybe they're misleading, but we're still hanging on there. But it's a relatively small part of our equity portfolio. It's only maybe 8%, 7% or so. Okay. It hurts, but.
And I'm glad for your honesty on that, Steve. Always great to talk with you.